Here's your stock in focus. We're doing Intel, and Intel was in the news. You could see it had a pretty big move to the downside, 4%, when the market was really breaking to some new highs here. So really gives you a good idea of the problems it's having. But, you know, I'm always a firm believer that the charts give you some advanced warning. This is what's so terrific about it. I mean, I remember as a broker, a stockbroker, you know, we used to have people come in all the time. Oh, this is a phenomenal stock. It's going to do great. You know, you hear all the, you know, the fundamentals about it. They're going to be ruling the world before you know it. By the time the CEO comes in there and tells you everything that, you know, you think is going to happen, and or you hope is going to happen, and you know, you get this great feeling that you're going to make your clients a phenomenal amount of money, and you say, you know, this is a fantastic investment. It all makes perfect sense, and then the thing starts to break down and continue to go lower, and it doesn't make any sense. Even Intel, because you can rationalize it so easily. You could say, well, you know what, Intel's a fabulous company. They have chipsets. They're constantly coming out with new innovations. They've always got a new chip that comes out. They put a lot of money into R&D. They constantly start to hit the market and saturate it. They're doing very, very well, and I think they'll, you know, still be on target. So you can rationalize anyway. But does that really matter when you're seeing the stock go down and start to break down here? You're seeing this at a prior top near 25. And now it's at 23. So it doesn't make a difference if you bought 10,000 shares, 50,000 shares, options, or, you know, even if you have short, you know, you don't really have a huge position. It doesn't make a difference, because when you're out of the swing, you're out of the swing. And, you know, the whole thing is you're starting to see, I think, really just action that has been completing for some time. Look at what you have here. Here's your signs. You see this really big tail that happened in, you know, in June. You see that it's not able to really rally much higher. You see it go near the low, and then what do you get is follow through. Okay, it holds the 21-day. It tries to rally back. Can't break through the ranges. Starts to really trade lower, really engulfing the prior day here, just showing very big bearishness. Now it breaks what? Through the 21, then through the 50. Okay, it tries to stabilize. Can't really get past the 50. Goes to the 100 because it needs to stabilize. Right off the bat, you don't need anyone really just to tell you that this is getting weak. You could see the divergence that's happening as prices were trying to move higher. You could see the huge divergence is happening. Then you see prices try to rally back. It gaps up, gets everybody excited. What is it doing? It's coming back to retest the 50-day moving average in the prior swing high. Can't do it. So why is it rocket science that all of a sudden it's going to be breaking down 4%? It's not. Yes, there is that possibility it can break through. Yes, absolutely right. But the trend has been down, and it has been a corrective action. So, you know, in reality, unless it really started breaking through that range as a technician, you would be skeptical, and rightfully so. And look at what the trading range does today. Has to retest that 100. Now, you know, as a trader, and you know, as